good afternoon. You're watching Closing Trades on 80 Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the markets have taken a bit of a U-turn. We were comfortably above 19,400, scaling those fresh highs at the start of the trading session. But from there, we have taken a bit of a U-turn. As we pointed out, we are now at around 19,370. So seeing a bit of a profit booking. Nifty Bank, that was too seeing quite a bit of outperformance at start, was almost at that 45,600 mark, has cooled off almost 400 points from the highest point of the trading session. It was the PSU banking names that were doing well. In fact, the entire financials basket, right from the Bajaj twins, which are up anywhere between 5 to 7%, the likes of PNB, Federal Bank, they were all up anywhere between 3 to 5%. Most of them are still holding on to gains, but just cooled off a bit. The other space that we're watching out for is, of course, the auto sector. Eicher Motor has taken quite a bit of skid today. That's because there's increased competition coming in from Hero Motors. So while that one is excited with a gain of 3%, Eicher is down 6%. Telecom too is under the weather today. So that increased competition is something which is putting pressure on the likes of Reliance as well as Bharti Airtel. So we're watching out for that. What's actually bouncing back today is IT stocks. So they are definitely off the lowest point. Pull up a TCS, Infosys. They have seen quite a bit of bounce back today. So just watching out for IT stocks, because in the last few minutes or so, we are seeing a bit of a momentum, at least on some of those counters, Aisha.
Oh yeah, they are, and you can't take your eyes off from Bajaj Finance today, can you? I mean, the highest ever quarterly increase in their customer franchise is what they've clocked in the first quarter updates, and the AUM growth on that kind of a large base as well continues to be in excess of 30% on a quarterly basis, and was no different, a growth of 32% coming in Q1 as well. And just look at the way the street is actually rewarding that kind of commentary coming in from Bajaj Finance. 7.25% higher for Bajaj Finance as we speak, with Finserv in tow with a 5.5% gain coming in there too. Anisha was just highlighting Eicher Motors, and Hero MotoCorp is the one which is giving it a little bit of a competition, or at least the street seems to be believing so. Hero as well as Harley are going to launch Harley-Davidson X440 in India, and that's going to target the price range within which Eicher has its dominant position. So that's the one which is currently in focus. Eicher, of course, is down, but Hero MotoCorp and Bajaj Auto, remember, has another one from its stable wherein the pricing is going to be disclosed tomorrow. So that's what the street is looking out for. Triumph, that is. And of course, this IDFC First as well. The bank is going to be merging with IDFC, and the swap ratio got announced. So that's another stock which is in focus. IDFC currently higher by 1.7%, but IDFC First Bank lower by 4.25%. In fact, you know, this was the much anticipated merger. It's finally got the approval by the boards, and Nikunj caught up with V. Vaidyanathan, the MD and CEO at IDFC First Bank. He says that the merger has removed the overhang of 40% on shareholders now.
In the short run, let me just say that there is no overhang of someone holding 40% and what they're going to do with it. And there was so much of market speculation. All that is gone. Let me say speculation is gone. We are going to simply issue shares of IDFC Bank to the shareholders unlimited. Against 1.66, we're going to issue 1.55. That's it. So that's clean. Now, so speculation over in the long run and clarity. In the long run, if you think about it, this becomes a perennial institution because there is no promoter. So think of like how ICICI Bank, HDFC Bank, JP Morgan, whatever. You think of large institutions, they, with a diversified public shareholding, they grow and grow and grow and grow forever.
Let's welcome our guests also on the show. It's Kunal Bothra, Naresh Mirani, as well as Gurmeet Chadha in the house to talk to us about the technicals and the fundamentals of the market. But Kunal, let me first come to you. Are you at all surprised by the kind of reversal that we are seeing in the market? Midcap index going into the red, those big red bars emerging for Nifty Bank, because you were talking about how there's a bit of an over-exuberance that you're witnessing in the options market, right?
Absolutely, yes, Anisha. So, typically the three factors which are now concerning the markets. One of them is the put-call ratio, which in the mid-session when the Bank Nifty was at 45,600 odd levels on the spot, the put-call ratio had entered into a territory of 2+, which is a huge amount of exuberance for the banking options. Now, ideally in this kind of scenario, we expect that the level which has been marked, where the put-call ratio hits those points, becomes a major resistance. So now we would probably be expecting 45,600 to act as a resistance for the Bank Nifty over the very near term. And on the downside, if the put call ratio comes back towards say 1.2, 1.4 mark, that's where we would probably expect that major part of the cool off has happened. We've retraced 400 points odd in the Bank Nifty from those levels, which means there should be a definite cool off further for the Bank Nifty at least over the next couple of days. The second, the most important factor is the India VIX, which is in the last 2 days has risen from 10.5, 10.7 to now 11.7 plus mark. That also is a bit of a concern for the markets, that the VIX is rising at a point when the markets are going into a strong rally mode. And the third, the most important point is the indicators where the Bollinger Bands have entered into a 3 sigma deviation for the Nifty. This also indicates a bit of an overbought nature. So all in all, it indicates that the markets are getting into an overbought territory right now, and it always makes sense to try and be a bit more light in this kind of a market, or at least try and start booking profits and trail stop losses in your existing long positions.
Naresh, is that your fear as well? Is the market, according to you too, getting into any sort of overbought territory, and would you too recommend profit taking?
So, like we discussed in the morning, 4 gap ups took place. Today is the 5th one. Historically, we've not seen 5-6 gap ups sustained. So it needs a pause. Say there are 2 ways which can happen. Either we see a correction of 300 points, 400 points from the top, or we take a pause for 2-3 sessions. So in both the cases, we take a pause ideally over the next few sessions. The only cases, if you look at the Bank Nifty has not made a similar move to the Nifty, wherein the last range of targets have not been done. So Bank Nifty could catch up, and Bank Nifty, the top 2 heavyweights are still looking interesting. HDFC Bank has just made a new all-time high. ICICI Bank is 20 points away from an all-time high. Now that's 50% of the index. So the reason Bank Nifty is a hold, but the Nifty is time to book some profits and focus more on stock specific, wherein we could now form a new range. It could be 19,150, 200 as a base for now, and 19,500 to be a resistance. So time to be more stock specific, take some bets off in places where there has been huge moves, like NBFCs like L&T Finance Holding or a Mahindra and Mahindra Finance. A lot of these companies which have gone up 30, 40, 50% over the last couple of months is the place where you want to take some chips off the table.
Time to take some chips off the table, but that's the question I want to put to Gurmeet as well. Gurmeet, and that's specifically with respect to Bajaj Finance. You track that one closely. Are you tempted to book some profits, or this is just start of another bull run on that one?
I've been an investor luckily in Bajaj Finance since 2014-15, and I've never booked profits in the last 8-9 years, and it's rewarded. It's a high beta stock, because it always commands a premium valuation. So whenever there's any stress in the economy, whenever the growth is slightly subpar, there is a reaction in the market. And after yesterday's update, I think the market, probably the only concern the market had was that at 2.5 lakh crore AUM, can you continue to add 3-4 million customers every quarter? Can you still grow at 30%? I think they're trying to answer that. And I've been saying this for a while in India. What is happening is that the credit creation is reaching to tier 2, tier 3 towns at a much faster pace, and this growth in credit is more secular. But you have to be mindful of valuations, and players like Chola, Bajaj, even to a certain extent maybe Poonawalla, you should do a combination of price to book and price to earnings, right? Because these are more consumer, they are play on more consumer spending. So if you see Bajaj, for example, it's what 3,000 odd crores a quarter, kind of a profit run rate now. If you take last quarter, which is about 12,000-13,000 crore PAT. Now, if you give, let's say, a 20% EPS estimate, it trades at roughly about 30 times. So that is how you probably have to evaluate them, other than obviously the traditional price book metric, in my view. So I may not want to add more at this price, but for me, it continues to be a long-term core portfolio stock.
Is that the case? Or rather, I should say, I'm sure that's the case with the behemoth now in the making, HDFC Bank post-merger as well, Gurmeet?
Absolutely. As I said, I do a stock sit in HDFC. And I think HDFC is due. I think what we've just seen is it's just coming back to 1,700 plus levels. If you see again, the combined entity trades at about 15 times earnings. In fact, if you see valuations, I've not seen HDFC at about 3 times, 3.5 times book value. It's always been at the higher end. I think one concern market has is that, the return ratios will suppress because of the integration, which I think is more short term. But there are huge opportunities, Aisha. If you see mortgage now, they are now 7 lakh crores. And what the merger does is that the loan book becomes very balanced. Also, I think their initiative and investments on expanding branches in semi-urban and rural is now paying off. So if you see their, the rural and the commercial bank loan book, there they have gained market share. They're almost 27-28%. In MSME, they are now almost at 19% market share. Overall, if you see last 7-8 years, they've actually gained 6% market share.
Okay, I think we've hit a bit of a technical glitch with respect to that technical connection. Maybe it's just the rain gods playing spoil sport. But for now, the market is holding up all right. Yeah, we're off the highest point of the trading session, but it's not very scary because we are again trying to go towards that 19,400 mark. In the meantime, just wanted to quickly highlight a couple of counters before we slip into a very short break. Let's pull up the graphics if we can for Aster DM Health. There's an HSBC report which has come out and there's quite a bit of upgrade that they have given into the counter. They maintain the buy, but the target price has been spiked to 330 versus 264, and that's what is really propelling with that gain of around 12%. They are saying that there's a probable restructuring which is on the cards, and that's likely to unlock the value for shareholders. Plus the fact that the revenue growth is expected to continue to be quite strong is something that they're watching out for, and they are expecting some sort of shareholder return also to come back to the shareholders after this restructuring happens. So that's one stock that we're watching out for. Quickly, Kunal, if you can give us your perspective on the charts of Aster DM as well.
Well, it's an interesting chart because, the stock over the last so many months have been trending quite well. In fact, remember, I think tracking the stock when it was around 200 to 20 mark where it was at a swing breakout, and now the stock has moved up, I think 40% higher from those levels to 300 plus mark. The volumes have also looked quite exceptionally strong today for Aster DM. So I would believe that this is a strong case of a buy and hold kind of a candidate. Any kind of a dips, I think the stock gets this periodic correction of 5% to 10% in a matter of 2 to 3 months kind of a time frame. So that's a good enough zone to dip in, dip in and buy back again into the stock price. So it could be a good buying zone for Aster DM.
Right. Okay, on that note, let's take a very quick break. We'll, of course, continue our discussion with our experts on the other side. Hero MotoCorp, Bajaj Finance, PNB, that's where all the action is, while the index is definitely cooled off from the top.
Let's say fiscal incentives as well. There's things like road tax, registration, a state subject. What's being done in that regard?
We are doing one better than most states. The regulars are on the EV policy itself. But what we do want to push for is the incentives that we give the manufacturer when they come and shop.
Catch this exclusive conversation with Tamil Nadu's Industries Minister Dr. TRB Raja at these times.
Welcome back. Holding on around that 19,386 mark. Just pull up the intraday chart of Hero MotoCorp because that's piling on more gains as we speak. So that's one space which is definitely quite excited. 5% higher now on Hero MotoCorp, while on the other hand, it's Eicher Motors, which is taking quite a bit of skid, if I can call it that, because that one is down almost 6%. I think if we have reconnected our line with Gurmeet, would love to have his take as far as this entire biking scene is concerned, because it looks like it's heating up with Bajaj Triumph and this Harley, latest bike coming in.
I think I'm more constructive on PVs. I think what you would see, what has happened in China is something what is probably will play out in India. So I think you will see probably car sales shooting up. If you see 2016 to 22 and take out market share gains of TVS, the volumes have been pretty flattish. So it's been like more like a washout for the industry for the last 5-6 years as far as volume growth is concerned. So we do about 35 lakh cars a year. I think this number will go up. And they will grow very fast. In two-wheelers, I think the issue with the Hero largely has been that I think they really missed the premiumization trend, which was to an extent captured by TVS through Apache. I think that's been one turnaround for TVS, and to a certain extent by the other players, including Eicher. My sense is that probably once we see more launches and better EV leadership, that's also, I think Heroes has been slightly confused, although it trades at about 15 times FY25 EPS, probably half the valuation of peers. But till the time they really get the product strategy right, I would stay neutral. I think TVS is one which continues to do well. Eicher, on the other hand, I think there have been, in the past also threats due to brands even M&M got. But I think what they've done well is that with Hunter, they've got the average age down to sub 30. The Bullet refresh, I think, is due over the next 6-12 months in terms of the new platform. And the Meteor 650 also is doing well along with exports. So I think this premiumization trend will continue to play out further. And Eicher still remains in a commanding position. Obviously, valuations are slightly on the higher side. So I would prefer passenger vehicles and also play some of the autos ancillaries in terms of playing that value chain instead of really looking at two-wheeler stocks.
Okay, that's the take coming in then on where Aisha stands now with this competition coming on board from Harley as well as the Hero JV. In fact, my colleague Sumit managed to lay his hands on this new bike. So let's take it across to him and find out what the test ride was like.
We are at the Hero's test facility in Jaipur and we are today here going to ride Harley-Davidson X440. Well, the most affordable and the most, we can say that, lower CC bike Harley-Davidson has built. This has been designed in India. Talking about the design cues here, it's complete. We can say that a street bike. It looks like a complete bike which is nimble, easy to handle. It has a straight handlebar, which means that it's easy to maneuver in city conditions. Well, overall, it's not been loaded with a lot of features. When we talk about features, instrumental panel we are talking about, it's not been loaded a lot of them. Just one headlight and one instrument panel. That's it. It gives it a very simple feel. It gives it a feel of a street bike. Overall, it's one-cylinder engine of 440cc, liquid cooled and air cooled. It's got all other features for safety like ABS, anti-lock braking system. It has got that also. So it's overall a bike that can be good for everyday commuting. It's also something which is good for adventure, sports adventure category. So it's a bike which is powerful yet very agile. The cornerings are very good. This category of market is expanding fast. It's got a premium segment customers that are willing to spend money to get adventure and everyday riding as well. That's why it's special. The Harley-Davidson overall, this bike is made for India, made by Hero. Hero is also going to build many more bikes on this platform, especially for city market. It's not a rural market bike or commuter market bike. It's a very premium lifestyle segment bike, and that's what they want to do with this.
Well, that's quite a ride. But if I had to take the dipstick survey on that, Gurmeet, would you go and buy your Royal Enfields of the world, or are tempted by this latest version coming in from Harley?
I could be biased. I'm already a Royal Enfield owner, as I said, and that's why the view could be biased. But as I said, I think we probably should wait and see how it pans out. On Eicher front, if you see, as I said, Hunter is already doing 15,000 a month. There's a pickup in Meteor 650. In UK, if you see exports in the midweight segment, I think that the market share is already 20%, which is the best market right now. I think there is a plan to get to 15% in most markets. And as I said, there is a refresh of the original Bullet expected over the next few months. So I would still go with, considering the portfolio they have, the cult appeal it has. But as I said, it could be biased due to both the ownership at a stock level as well as the vehicle level.
Glued to Sumit's, test ride, Kunal. 2.29 lakhs to 2.69 for the upper end for Harley.
Yeah.
Ready to
Going
shell
for
out?
it? Yes or no?
Let's see. Let's see. But it looks interesting. I think the design looks interesting. I'm not too much of a bike fan, but then I was looking at the charts. I was looking at the
charts again.
I was looking at the design of the design for Harley as well as comparing with the RE 350, 650. Well, I think the design looks to be much more sleek.
And what about the charts? Now, since you look at them also.
So I think Hero MotoCorp looks very, very interesting. In fact, there's been a drastic move within the two-wheeler space where Hero MotoCorp has significantly outperformed the likes of Eicher Motors in the last 1 or 3 months. Hero MotoCorp has managed to break past above major resistances. Eicher has failed to do it. The stock has been unable to surpass the previous resistance of I think 3575, 3600 odd levels, and unable to sustain above those levels. But Hero MotoCorp has actually done it. And the more intriguing part is that the volumes are being backed in this move for Hero MotoCorp, which means that this is not just a short-term tilt or a event-based move towards Hero MotoCorp and selling of Eicher Motors. This is more of a strategic move, which I think should also play out going forward over the next 1 to 3 months at least. So I believe that this divergence of price performance should escalate for both of these names. So Hero MotoCorp can move up higher and Eicher Motors can continue to drag down.
Okay, that's the chart as well as the buy comparison for Hero Moto as well as Eicher. But what about the rains? While it has been pouring here in Maharashtra, but let's take stock of how July is likely to be for the rest of the country as well. Aishwarya is here with the monsoon update. Aishwarya?
Right. Well, it's time that southern peninsula India now sees its full-blown shower. You know, last month, south of India saw a tardy monsoon most of last month, and now things are looking up for Kerala as well as south interior as well as coastal Karnataka. So if you see this table which shows for the rest of the week, except for Kerala, which is on the 4th of July, which is on a red alert, rest of the week is in the orange, as well as south interior Karnataka as well as coastal Karnataka are in the orange alert for the rest of the week. What else? Well, the extremely heavy rainfalls are expected upwards of 220 millimeters over these regions in Kerala as well as Karnataka, and IMD actually has issued a red warning over Kerala in certain districts. Now, what are these districts? We'll take a look at that. District level orange alerts are also issued across the western coast. Udupi, Dakshin Kannada, Uttar Kannada, Alappuzha, Ernakulam, Thrissur, Malappuram, Kozhikode, Kannur and Kasaragod. Now, two districts which are on red alert today are Kannur as well as Kozhikode. Now, these two districts are on high alert except for the rest of Kerala. Now, what does the countrywide picture look like so far as compared to the long period average? Let's take a look at the table that we've charted out so far. For the rest of the country, if you have a look, it's at 8% of shortfall as of now as compared to the long period average, much better than what we've seen in June, which was almost about 30% of shortfall of rainfall. So soon across the country we will see full-blown showers, and we will come to a surplus level by the end of July is what IMD expects. Despite this being an El Nino year, July we will see better than normal monsoons is what they're expecting. As you can see, northwest and central India are the ones that are soon to be in the surplus regions, and rest of the country still needs to be playing catch up in terms of the monsoon update.
Okay, so that's the take coming in. Overall, Northwest India has seen quite a bit of rainfall already, but then the rest of the country has to catch up. And catch up is what is at play when it comes to the Indian markets as well, because they are holding up quite all right. So let's get the closing trades from our charters then. Nuresh, what's the closing trade you're spotting?
So being a little defensive, stock which looks interesting is Hindustan Unilever. Stock made a top around 2500 back in 2020. And very recently, multiple attempts around 2700. So sustaining about 2700, 2740 would be a breakout. So expecting it to break out over the next few sessions.
HUL, that's a buy coming in, expecting a breakout. Kunal, what about you?
So I think at current levels would look to book out profits in L&T Finance. I think the stock has come out in a big overbought territory on the charts. 138.39 was the high for L&T Finance. So I think at current levels, 133.34 I think it's a good time to book out profits.
Actually, your view is getting a thumbs up from Kotak as well, because they this morning have actually downgraded the stock of L&T Financial Holdings. They have downgraded the rating to a sell versus a reduce earlier, though they have increased the target price to 95. Let's pull up some of those line graphics as well for you, wherein they say that there is no quick fixes available. Of course, there will be a transition at the leadership, but the inherent structural issues that L&T Finance Holdings has will take time to really go away. In fact, they're saying the profitability cannot change overnight. The turnaround is a long process due to the structural constraints, and the challenges of the low near-term growth and subdued return on equity do not have quick fixes. They're also talking about how L&T Finance will have to run down its wholesale book, which has been low yielding, and look towards increasing their retail portfolio, which has been something that a lot of these industry participants have been doing. And that's the reason they're suggesting that don't get too gung-ho already on the leadership change that's underway at L&T Finance. But on that note, slipping into a very short break, don't go anywhere.
Back with closing trades right here on ET now. Radico Khaitan, let's just bring up that stock up for you. It's climbed up about 10% in the last two trading sessions, and now they've unveiled their new gin portfolio. It's called Happiness in a Bottle. A happily crafted gin is what they're calling it, and that's the latest addition to their super premium product portfolio. Radico Khaitan, even though it's eased off from the top of the day, the stock is still very much holding out in trade. Kunal, you've been tracking the liquor space closely and always have liked Radico Khaitan. How does that, stack up with the others in the space?
Yeah, just the stocks, not the product.
Just the stocks.
Just the stocks.
Only the charts.
But I think, Radico has done well. There's one mid-cap name which I was actually tracking off late, and that's Som Distilleries. I think from 220, if I'm not wrong, has now moved up to, I think, 290 plus levels. That's a very, very attractive chart because it's confirmed a breakout on multiple time frames on the daily, weekly, as well as on the monthly charts. And I think that's the more intriguing part. The only disappointment so far, I think, is United Spirits, because that stock has been just languishing at this 900 band, 900 plus minus 25, 30 odd points for so many months on a trot. Even last expiry, I remember that the stock was on the verge of a breakout of this 925, 930 mark. It failed to do it, went below 900 levels, and now is back again just about that 900 mark. So I think the only within the space, the only few stocks which have been actually doing well, the likes of GM Breweries, Radico has done reasonably well. Global Spirits is also the other stock which I think has done reasonably well from the 2020 lows, and Som Distilleries is another new addition from the space.
Okay, so it's the mid-cap and the smaller names which have been doing better as far as the entire Alcobev space is concerned. Of course, Sula had seen quite a bit of listing at that one. But Naresh, wanted your take regarding a couple of these, buzzes in the trading session actually. Is there a trade within IT that you can spot for us? Anything that stands out?
So in IT, the only one which I still like is HCL Tech. That's a stock which has shown clear leadership in the large cap space. The stock has made a 52-week high and has continued to sustain. This is a stock which could slowly and steadily go towards 1300, 1350 levels. There could be a bounce back in Infosys and TCS, but not a tradable bounce. So the best trade right now is to look at HCL Tech. From here, any dips also is a buy, looking at a target price of 1300, 1350.
Okay, so that's the take coming in as far as the IT pack is concerned. But let's take stock of what else is happening today. Yes, it continues to be all about Bajaj Finance as well as IDFC, the twins there. And then to add to that, auto space is what we are watching out for. Aisha plus he, that's the big trade happening. Let's pose that question to Siddharth Kemka as well. Siddharth, within the entire two-wheeler space as well as the biking space, which are the stocks that take your preference?
Yeah, very good evening, Anisha. So if you look at the entire two-wheeler space, there has been a lot of momentum off late, especially some of the larger ones like Bajaj Auto, which saw a significant uptick both in terms of profitability as well as in its stock price. But if you look at our preference right now is with Hero MotoCorp, largely driven by the low valuations or the steep discount that it trades to some of these other peers, including the likes of TVS Motors. So we see the demand recovery led by the rural segment, which has been a drag for last couple of years. We expect that to improve from this year onwards. And to back it up, the company has been launching several newer products, both in the traditional as in the EV space, which is picking up, gathering pace for Hero Moto. The stock is trading at almost a 15 times one-year forward compared to a 30 times TVS Motor PE. And yesterday we saw the new entry by Hero Moto into the premium segment, which it had so far not catered to in association with Harley. So I think all this put together, we believe that Hero could do well in the two-wheeler space. We have a buy rating on Hero Moto and we have a target price of 3,500.
Okay, the primary market as well has been pretty active of late. We had a new listing today, HMA Agro. It's up about almost 7%. And, you know, listed on the exchanges today, a 7% premium is what it's quoting at from where it listed. And now, of course, it's eased off, a little soft in trade right now. And then there's Senco Gold IPO as well, which opened today. So that of these new entrants or particular IPOs in the offing that you're looking out for?
Yeah, so we did had a look at some of these IPOs. Definitely, we had a look, although we did not had any views on HMA Agro, but some of the others we have been liking, and we saw the strong interest, especially in the two recent IPOs, the Cyient IPO, DLM IPO, and the other, the drone company IPO. So I think there are some of these unique IPOs that are being offering that the market is liking. And compared to that, you have some of the other, the usual businesses which the market is clearly ignoring and not kind of having that kind of flavor with certain IPOs like the PHK Ventures, which the market has clearly given a miss. In the forthcoming IPO, we are seeing Senco IPO opening and seeing some interest, given that it's an interesting jewelry space where it has a strong brand in the eastern region. The IPO is attractively valued if you look at some of the comparable peers, be it the Kalyan Jewelers or the TBZ and Tangamail Jewelers, which are the smaller retailers. We don't compare it with the market leader Titan, which definitely commands a lot of premium. But it is coming at an IPO of about 15 times FY23 compared to some of the others which are trading at 25 to 30 times. So definitely there is a lot of money that the bankers have left on the table for Senco, and it looks interesting, at least as of now.
Okay, so that's it, take coming in on latest IPO, Cyient, DLM and Senco specifically. Those are the two stocks that Siddharth was watching out for. But quickly, let's talk about some of these price volume buzzers as well. In trade, we are watching out for Tata Teleservices because that's shown a bit of a breakout. It snapped the 3-week losing streak. And then the volumes today are 4x the 10-day moving average, so we're watching out for that. 6% higher for Tata Tele. Punjab National Bank has also seen a breakout from the reverse head and shoulder chart pattern. It's hit a 5-month high on an intraday basis. The volumes at 4 times the 20-day average. And Bharti Airtel, which has seen a bit of a breakdown from upward sloping support trend line, it's been forming higher highs and higher lows for 4 weeks. But today there's a bit of a breakdown which is visible as far as Bharti Airtel goes. Siddharth, what's your view on the entire telecom space? Is this something which is still investable or still a good idea to look at, or there are so many opportunities available in the market that telecom is getting completely sidelined?
Yeah, Anisha, so I think definitely if you look at the telecom space, there has been a lot of to and fro's, and with only 2 companies which are there as a direct investable. You have Bharti Airtel and Vodafone Idea. You can play Reliance Jio only through Reliance Industries right now, which comes with a lot of other businesses. There is definitely a lot of interest in telecom space, given the strong growth that we are seeing in the ARRs, the shift towards, or you can say the users shift towards the higher bands from upgradation from 2G to 3G and from 3G to 4G, and now the upcoming implementation of 5G, which is much awaited, which could also drive growth for some of these players. Interestingly, a lot of these companies have, at least Bharti Airtel has reduced a lot of its debt and is now showing strong growth. So overall, I would say that definitely it's a space one can look at and can definitely look at growth, especially if you look at Bharti Airtel, which we continue to like, and I have a buy rating over there.
Buy on Bharti coming in, but what's the dealing room chatter like, given that 19,400 knock, and then from there we eased off? Let me take it across to Sharad and find out exactly that.
In focus, we are having endurance index, and what we are hearing from the dealers is that this small cap auto ancillary company is seeing buying from domestic institutions. Now, last month itself, they had met key DI investors from the insurance space, namely Bajaj Allianz Life as well as Max Life. And earlier in the month of June itself, they had also met FI's Amansa Group as well. Already Amansa Group is having stake in the company as well. Now, amongst the DI investors which are already invested in the company, the bigger names are coming from the mutual fund houses, which include Axis Mutual Fund, SBI Mutual Fund as well as UTI Mutual Fund. And from the insurance space, LIC is also having stake in the company. Now, looking at the stock itself, the stock has been on a run and it has actually come to its 18-month high levels, and in the day's trade itself, the volumes have been very strong, roughly 6 times its 20-day average. Now, there are triggers happening for the stock which is coming on the positive side, and the first one is that the two-wheeler demand that is expected to see a resurgence in the rural markets going ahead, and this is coming after 2 to 3 years of backlog. Apart from this, also EV segment that is getting a strong buzz of orders, and especially in the ABS segment which the auto ancillary company is operating in. Apart from this, the European business, already the commentary was very strong in the fourth quarter when it comes to the higher margins coming in because of the declining energy cost, and this is expected to actually have a cascading effect in the first quarter of FY24 as well.
For putting that into perspective, so Endurance Tech, that stock has taken the fancy of a lot of HNIs and the domestic institutional investors, so we're watching out for that one. But just let's quickly take stock of what are the other spaces in the market at this point of time, and PSU banking space is definitely showing quite a bit of bounce back. Siddharth, which names in the PSU banking vertical would you recommend apart from SBI?
Yeah, Anisha. So I think the PSU banking space is definitely picking up pace, especially given that there is a lot of interest in the market and the banking sector is now taking the lead back. Again, the PSU banks would report strong numbers, and on back of that, the market is liking some of the other names. So within the PSU banking names, we like Bank of Baroda, which is a buy for us with a target price of 240. We also like Canara Bank with a buy rating and a target price of 400. If you look at the overall banking space, although you would see the normalizations of NIMs, which would limit the growth from the high base that we saw in FY23. But nonetheless, the overall banking sector, as I said, would continue to report net profit growth in excess of 20%. And the PSU banks would far outperform in terms of growth to their private peers, and which is why there is a lot of interest within the PSU banking space.
PSU banks have really been a buzz of late. In fact, look at the move on a PNB, for instance, today, or a Can Bank, or a BOB in trade yesterday. Naresh, just wanted to come to you on the entire PSB pack, and Kunal, as earlier today, was highlighting as to how he's seeing strength within this end of the market or within this end of the banking sector. Any trades that you identify here?
So one trade which is still left, which can do better, is Indian Bank. That has been sideways. It's been a leader in the PSU banking space in the last move. The stock has relatively not made the recent 52-week high. A lot of other names have already spiked up quite a bit. So PNB looks interesting, but the risk reward is not great. Bank of Baroda, Can Bank still look interesting. So out here, Indian Bank is one stock which could still have more upsides towards 330 to 360 levels. So out of the whole pack, as of now, I'll go with Indian Bank.
But let's talk about the best performing sector of the year. Any guesses? Best performing sector of the year?
Banks?
No,
FMCG?
FMCG is the second best, not the top one, but the top one is real estate. So tell me your top picks from that segment. Because yeah, even I was surprised. I didn't expect it to be the top performer, maybe in the top 3 or 5.
Could be FMCG or auto.
FMCG is close second, but yeah, autos are still far behind, but FMCG definitely the second one.
Yeah, not a surprise, but I would believe because when the market gets into such a kind of a risk-on phase, it's always it's always seen that the mid caps and the high beta stocks, they would tend to outperform. Within the real estate pack, I think there are two stocks which have been extremely bullish, and I would continue to have a bullish stance there. One is DLF from the F&O space from the real estate pack. Looks very attractive. I think now today the stock has inched closer to that 500 levels. 495, 498 was the high for DLF on intraday basis. So that's a stock which still looks attractive, and I would continue to be bullish on the stock, expecting the stock possibly in the next 6 months to head to levels of even 600, 650 plus mark. Anantraj is the other stock which I would be bullish on, and I would now expect that the stock should scale past about the 200 level. So 175 is where the stock is trading right now. Looks attractive for at least another 20% jump to 200 plus over the next 6 months to 1 year.
Okay, so that was the top performing sector. Let's talk about the second best now, which was FMCG. Siddharth, what are your top recommendations? Is it the likes of ITC, etc., or some other names that catch your attention?
It's very attractive. I think now today the stock has inched closer to that 500 levels. 495, 498 was the high for DLF on intraday basis. So that's a stock which still looks attractive, and I would continue to be bullish on the stock, expecting the stock possibly in the next 6 months to head to levels of even 600, 650 plus mark. Anantraj is the other stock which I would be bullish on, and I would now expect that the stock should scale past about the 200 level. So 175 is where the stock is trading right now. Looks attractive for at least another 20% jump to 200 plus over the next 6 months to 1 year.
Okay, so that was the top performing sector. Let's talk about the second best now, which was FMCG. Siddharth, what are your top recommendations? Is it the likes of ITC, etc., or some other names that catch your attention?
Yeah, Anisha. So I think within the FMCG space, we continue to prefer ITC, which has been our top pick within the FMCG space. Both its cigarette business and the non-cigarette FMCG business have contributed to the growth and the margins in FY23, far outperforming the staple segment. Plus, you had the added growth from the hotel space, which has been continuously doing well. It posted a healthy 24% earnings growth in FY23, while we are expecting the EPS growth of about 15% over the next 2 years, and we continue to expect strong re-rating from there. The other stock that we are liking from the broader consumer space is Varun Beverages, which has consistently delivered in terms of performance, and the market has rewarded. They have expanded capacities in India. They've acquired certain regions. They've got into the food business, and now they are going global with some of the other high growth regions which can add to the growth. So I think these two stocks within the consumer space is what we like, ITC and Varun Beverages.
Okay, so that's a take coming in as far as the FMCG pack is concerned. Let's talk about the third best now, which is the Automac, right? We have discussed that enough, but nonetheless, let's take that discussion forward and talk about the car segment now. And Naresh, what are the names that you want to pick out from the PV segment?
So I would be looking at Maruti. That's the most interesting one right now. Over the last 5 years, it topped out around 9,800 to 10,000 back in 2018 a couple of times. Even in this year, it has done so a couple of times. Last a few days back also, it came to those levels and corrected. So at 95 to 9,700, that's a good zone to accumulate. Eventually, over the next few weeks, I would expect it to break that 10,000 mark and go higher. So I would go with Maruti in the pack.
Let's talk about some more stocks, and from the class of 21, it's Nykaa, which continues to underperform massively. Siddharth, why do you think that's the case?
I think we don't have a coverage on Nykaa, but we had been seeing some of the other stocks within our coverage, which is Paytm and Zomato, both of which we have been liking at least for the last couple of months. Based on the improvement in profitability. If you look at Paytm, the monthly updates have been quite encouraging. They have reported strong growth, not only in the gross merchandise value, but also the number of loan disbursed, which has been their key business, which has been driving profitability, the lending business. And that is what something which has made us positive on Paytm. We have also upgraded our target price recently to 1,050. We had earlier initiated coverage with a target price of 900. So we believe that constant improvement in the margins as well as the operating leverage will help improve Paytm's profitability. We expect a 26% revenue CAGR, and we are expecting it to turn both EBITDA and net profit positive by FY25.
Okay, let's take a look at some of the other buzzers as well, and let's mark the losers actually, and let's see what the insurance pack is up to after having a great session the last 10 trading sessions. Let's see what those names are up to, your likes of HDFC Life, SBI Life, etc., and a little somber now in trade. Naresh, let's revisit this big buzzing sector from I think the last fortnight or so.
So I think a near-term top is in place for some of these names. HDFC Life went up from 470 odd levels to 670. The blocks of HDFC got done. So I would expect it to now at least pause. A new range would be say closer to 620, 630 would be a support, 680 would be a tough resistance to cross. So HDFC Life as well as the other names like ICICI Pru, a lot of these names made a sharp move almost of more than 30-40%. So expecting a pause in them. So ICICI Pru has gone from sub 400 almost closer to 580 on the higher side. The previous high in August of last year was around 600. So upsides are limited from here on in the pack. The only one which has done a relative underperformance is LIC of India and a Max Financial. So if somebody wants to get into that sector, those two names could still be interesting. But the other names which have made a 30-40% move from the lows are going to pause is the view. Time to take some profit in them.
Okay, point taken. But look at the chart of Aster DM. Of course, it opened, 8-9% higher. It trended high by 12%, and now it's solid 17%. So the rally wasn't just done. It's now reaching that 334 level, and it's now close to that, note coming in from HSBC as well. I think the target price has been met within a day itself as far as Aster DM is concerned. But separately, Suzlon Energy, that stock has been doing rather well for itself right from that $8 mark. It's gone all the way to 18, so 10% higher on that one. And again, it feels like that the move is not over because you're still seeing some uptick on that one. And Greenlam Industries is also higher by 7%. Kunal, your take as far as Suzlon Energy is concerned, and even Greenlam Industries or Power Mech, if you track either of these two names?
I don't track the other two names. Suzlon I've been tracking, but then trying to buy these stocks in the anticipation that it would try and break out would be a lot a lot to ask for, because the stock now seems to be getting into an overbought territory. So in the last 1 week, if I'm not wrong, 6-7 trading sessions, the stock has rallied from 13.5 to now 18.5 levels, which is a huge jump for the stock, and the jump in terms of indicators, the RSI on the daily, more importantly on the hourly charts, have entered into the 85 and 90 plus mark, which indicates that this may not be a best time to initiate a buy for Suzlon, even if someone has a high risk appetite. So wait for a significant correction. Maybe the stock comes closer to 16.5, 17 mark. That would be a better level to buy.
Right. Okay. Let's also get in some BTST trades as well going on that note. Kunal?
So would suggest a buy on NTPC, more of a defensive name. The stock looking attractive, made a fresh swing high today above 190 plus mark, targets of 201. Stop loss at 189, and the second would be a sell on HAL, Hindustan Aeronautics, the stock forming a double top on the daily time frame charts, suggesting a sell with a target of 3650, stop loss at 3800.
Okay, interesting list there. Naresh, what about your BTST ideas?
So first would be a buy on Biocon, which has faded off today in the last two sessions. A good entry point here, stop loss at 259, target at 270. Second is a buy on HUL, which is on for breakout, stop loss at 2680, target price of 2750.
Siddharth, just quickly, since it's just 3 minutes left for the closing for the trading session today, what's your expectation from the Q1 earnings which are likely to kickstart next week? Is it going to be an earnings season where we are likely to see more downgrades, or do you think we're already going with somber expectations?
So I think overall the quarter would be mixed bag. There are certain sectors which would not report a very strong numbers. Say for example technology sector, where we are expecting a little bit impact on earnings because of deteriorating macros and wage hikes. But on the other side, we would see strong earnings from the sectors like banking. NBFCs would also start with chipping in with the strong numbers. Auto is another sector where we could see continuously reporting strong numbers. So it would be definitely be a mixed bag. We are not expecting a very strong quarter per se, but I think the expectation from the quarter being at a Q1, and a lot of sectors would see some recovery because of the demand commentaries that we saw last quarter. Some of the companies are definitely expected to report strong numbers. We have already started getting the pre-quarterly updates, especially from the likes of banks and some of the retails, which shows that the demand environment is pretty strong.
Okay, that's the take coming in on the overall market. Siddharth, we let you go on that note. Kunal, Naresh, we'll see you winding up for